Thinking about buying a home but worried about your credit score or down payment? FHA loans could be your secret weapon. In this video, we're breaking down the pros and cons of FHA loans, how they make homeownership easier but why they can cost you more in the long run. Stick around to learn if it's the right move for you. FHA, Federal Housing Administration, loans are a popular option for homebuyers who need more lenient qualification requirements than conventional loans. They offer various advantages but also come with drawbacks. Understanding both sides can help borrowers decide if an FHA loan is the right choice for their needs. Pros of FHA loans. 1. Lower credit score requirements. FHA loans are accessible to borrowers with lower credit scores compared to conventional loans. While conventional loans may require a credit score of 620 or higher, FHA loans can be obtained with a score as low as 500, with a 10% down payment, or 580, with a 3.5% down payment. 2. Smaller down payment. One of the biggest benefits of FHA loans is the low down payment requirement, just 3.5% of the home's purchase price for borrowers with a credit score of 580 or higher. This makes homeownership more attainable for first-time buyers and those with limited savings. 3. Competitive interest rates. FHA loans typically offer competitive interest rates, which can be comparable to or even lower than conventional loan rates. The government backing lowers the lender's risk, making it possible for borrowers to access favorable terms. 4. Higher debt-to-income (DTI) ratio allowance. FHA loans allow a higher DTI ratio, often up to 43 to 50%, depending on individual circumstances. This flexibility enables borrowers with significant debt to qualify for a mortgage. 5. Assumable loan option. FHA loans can be assumed by another borrower, meaning that if the homeowner sells the property, a qualified buyer can take over the existing loan at the original interest rate. This feature can be beneficial in a high interest rate environment. 6. Financing for home repairs. FHA offers 203K rehab loans, which provide funds for home repairs and improvements. This is ideal for buyers purchasing fixer-upper properties. Cons of FHA loans. 1. Mortgage insurance premium, MIP, costs. FHA loans require both upfront and annual mortgage insurance premiums, MIP. Upfront MIP, typically 1.75% of the loan amount, paid at closing or rolled into the loan. Annual MIP ranges from 0.45% to 1.05% of the loan amount, paid monthly for the life of the loan unless refinanced into a conventional loan. 2. Property restrictions. FHA loans are limited to primary residences and cannot be used for investment properties or vacation homes. Additionally, properties must meet strict appraisal standards to ensure they are safe and habitable. 3. Loan limits. There are limits on how much borrowers can take out, depending on location. In high-cost areas, FHA loan limits are higher, but they may still be insufficient for purchasing expensive properties. 4. Less competitive for sellers. Some sellers may prefer buyers using conventional financing because FHA loans have stricter appraisal and inspection requirements, which can complicate negotiations or delay closing. 5. Long-term costs. While FHA loans provide easier access to homeownership, they can be more expensive long-term due to ongoing MIP payments. Borrowers may need to refinance into a conventional loan later to eliminate mortgage insurance. Conclusion? FHA loans can be a great option for first-time buyers, those with lower credit scores, or borrowers needing a low down payment. However, the costs associated with mortgage insurance, property restrictions, and loan limits may be drawbacks for some. Understanding your financial situation and long-term homeownership goals can help determine whether an FHA loan is the right fit. If you're considering one, it's advisable to compare loan options and consult with a mortgage expert.